Okay, Nithya Balasubramanian joins us, and let's discuss pharma at length to understand the very basic nuances of why the pharma stocks are up. Will it sustain? Are prices coming back, or this is just hot air, nothing else? Nithya, so nice to have you back. Thank you for joining us. I'll start with very basic questions. In which are the categories of pharma, API, generic, injectables, the tide has genuinely turned for the sector?
See, I think honestly, what we're seeing is definitely some recovery in US generics pricing compared to last year. So, last year, if you remember, price erosions were somewhere in the zip code of 15 to 20%, depending on your portfolio, because there was a lot of inventory in the channel and it took a bit of time for that to correct. However, if you look at this year, thankfully, that headwind is no longer a factor. And on top of that, we have seen some disruptions in the market. Right, we've had a handful of names who have gotten into a bit of trouble, filed bankruptcies, recalled some products. So that's creating a little bit of opportunity in the market as well. However, does this mean that there is now a structural tailwind and we see this as a multi-year phenomena? Not yet. Right. So compared to last year, definitely things are looking better, and it should help companies' gross margins as well. Not yet seeing this as structural. We really need to see very large scale capacities get sucked out of the system for this to become structural.
So, if you can categorize it in terms of API, formulation, and injectable, do you see this trend applicable for all three, where there is a minor uptick but it's going to be difficult for it to go higher, or you think all these categories are uniquely positioned?
See, I think it's across the board. The price recovery we are seeing is across the board, both in oral solids, generics, as well as injectable generics. We are seeing pricing recover from the lows that we saw last year. And any positive pricing impact in the end market, in the formulations end market, will have a positive impact on the API market as well. So API is actually not delinked, right? So we do see improvement. We do see names that have higher exposure to the US generic markets doing relatively better in the next couple of quarters, but not yet arguing that this is structural and a long-term trend.
If you have to look the India stack, I'm using the word India stack, which IT guys use within pharma analyst. But if the India pharma stack has to be made, which starts with, let's say, Sun right at the top, followed by Cipla, Dr. Reddy, and to some extent Lupin, how is the India stacked positioned right now? Each one has a disadvantage and advantage and a USP.
See, I think the India market, I think, has remained a fairly good supporter, both in terms of margins as well as top line, as well as margins for most of the names that you mentioned. Let's keep Divi's aside. Double digit, and Sun, Cipla, Lupin, etc., being market leaders, should be able to do well. And most of these companies, if you note, have actually added feet on the street last year. So while all those costs are in the P&L, the rep costs are in the P&L, we're expecting that this year you'll actually see their productivity improve. So it takes anywhere between 1.5 to 2 years for a new rep to become to touch average productivity. And we see that kind of contributing and supporting both top line growth as well as margin expansion this year and the next for the India businesses for these companies. So thankfully, that part of the story remains a secular growth story. Now, coming to the US, obviously, if you look at the stack that you're mentioning, I think these companies are, their business models are slightly different, and what is driving the stock is different. For Sun Pharma, it's more about how long a growth runway have they in the specialty business in the US and how much operating leverage can they drive as the top line continues to grow. Now, we like the name. We have remained bullish. We think Sun is pretty much the only name which is structurally breaking away from the pack in terms of building a more resilient specialty portfolio in the US. We think that marquee assets like Illumia and Winlevi have multiple years of growth runway left. And they're filing something new, which will hopefully, again, move the needle in terms of operating leverage for them. Cipla and Lupin, on the other hand, their story is more of monetizing the complex generic investments that they have been making. Both for Cipla and Lupin, they have been investing in respiratory generics and complex injectables as well. These are, again, complex. I think a lot depends on how good your file is, FDA inspection of the plants, etc. But we are expecting these product approvals to play through as catalysts for the next rung of Cipla and Lupin.
So if somebody is watching this interview and say, Nithya, I like your analysis on ET now, always love that. All I want to know is that pharma stocks are up 15 to 25% from the recent low. Should I now dare to participate, or I've missed the bulk of the comeback rally in pharma stocks? How would you advise?
See, I think I have slightly different answers depending on the time frame that you're looking at. So if you have a slightly longer time frame, if you're looking at it from a 1-2 year perspective, I think the names that we like are Sun and Cipla. Sun for the operating leverage that the US specialty investment could deliver. Cipla for the complex generic assets that they've built in the US, which are again comparatively more resilient than your oral solids, which is what pretty much every other company is building. And we also like Biocon because we think the US biosimilars market is opening up more for incumbents like Biocon who've been investing in the space. But unfortunately, there aren't too many near-term catalysts playing out for these names. So if you're looking at it more from a tactical next 2 quarter perspective, I think names like Aurobindo or Lupin or Dr. Reddy's, which have a higher exposure to the US market, are likely to benefit, given the improvement in the pricing trend that we discussed before, right? So these Aurobindo, given the wide portfolio that they have, they're more likely to benefit from any small supply disruptions as well, right? So they have everything in the portfolio. They have flex capacities as well, given the capex investment. So more likely to benefit from the disruptions in the near term.
If we were to also talk about Gland Pharma in specific, you guys are very bullish here, expecting close to a 70% return. But the results haven't been all that promising in the past many quarters. So what's giving you the conviction?
See, I think when we look at FY24, we see recovery in 2 to 3 of their large molecules that have been selling in the US. We think enoxaparin, heparin, where they had supply issues, and we think that's now getting sorted out. Micafungin has also been a meaningful product for them in the past, and we think that on the low FY23 base, these are 3 large products that will see a little bit of recovery. And we also believe that there'll be operating leverage. So they had added 3 lines last year, and all the costs related to the line, power, power maintenance, manpower, etc., are already in the P&L. And if the revenue is growing as anticipated, that kind of flows through to the bottom line as well. That's the near-term story that we see in Gland. From a long-term perspective, see, we think to some extent the barriers in injectables manufacturing, we think, has been artificially lowered, given that FDA inspections have been scarce in the last 2-3 years. Right? And pretty much every sterile injectable facility that has seen a recent inspection from the FDA has resulted in either observation or even more escalation into a warning letter or an import alert. So we think over a period of time, as FDA inspections pick up steam across both India as well as China, we believe that the competitive intensity, the higher competitive intensity we are seeing in the end market, will normalize to a more reasonable level. And that's why we think the injectable business will remain slightly more specialized with relevant barriers to entry in the long run.
The Pharma is a tricky one. The stock has gone up from sub 400 to current levels of 700, and they've had problems in the past. Plenty of concerns in terms of corporate governance, what happened to the injectable business. But if I look at your report, it's right up there. We like Aurobindo Pharma, increasing drug shortage, normalization and erosion, and API prices going higher. Aurobindo Pharma, why?
So Aurobindo Pharma, our official rating is market perform. We do not recommend it from a long-term perspective. And as I mentioned before, it's only a tactical recommendation for the next couple of quarters, for the reasons that you just read out.
Let's understand what is next for the Indian pharma industry from next 2 to 3 years. Let's not look at this quarter, FY24, even FY25. What are the new things Indian pharma companies currently are betting on, which do you think could change the game for them? And just for the benefit of our viewers, if I may draw a parallel, just like the IT sector has got re-rated because of AI, are there any similar parallel disruptive things with the Indian pharma sector is working on?
So when it comes to the India domestic market, it's a little bit of more of the same that I see for the next 2-3 years. We do see more companies actually investing in feet on the street, trying to now expand into smaller towns. So hopefully we will see companies address white spaces in the market and meet the latent demand that already exists. And we also see several companies investing in trade generics, right? So we think that's an additional growth lever to expect in the next 2-3 years, which wasn't the case before, right? Very few companies invested in trade generics. Now, looking at the US market, I think in the near term, we are anyway hoping to see more complex generic opportunities play out, because that's an investment that companies have been making. But fast forward 3-4 years from now, we think more players will step up in terms of biosimilars. For a lot of players, it's not even an option, right? If you're building $1 billion, 1.2, $1.3 billion kind of portfolio in the US, biosimilars pretty much offers you the only peg for growth. If you look at the broader market, that's where the opportunity is. If you look at the number of products that are losing exclusivity in the next several years, and all of them actually are biologics, right? So therefore, Indian companies, I would believe, will have to start increasingly invest in biosimilars, and we have seen some investments to that effect. So Cipla has done a joint venture with Chemwell. Alkem talked about an investment that was done in Enzene. Aurobindo's been talking about stepping up investments and accelerating clinical trials. Dr. Reddy's has been saying the same. Lupin has been investing. So we think the next big delta, we're not sure how many will be successful, because it's not an easy opportunity to address. There are significant barriers to entry, both in terms of development as well as manufacturing, and it's a high fixed cost business, right? So we don't expect everybody to be successful. But if you're talking about what will be new in the next 3-4 year time frame, we think a few of these guys will start building a meaningful biosimilars portfolio, which can help drive growth in the US generics market.
All right, appreciate your time. Good to get in a taste of what exactly it is that you're looking at within the entire pharmaceutical space, some of the key drivers as well for the companies that you're bullish on.